Hello, it's a pleasure to have you back with us for episode 2 of the partnership panel with Newcastle for Intermediaries on affordability. I'm Samantha Partington, freelance journalist for Mortgage Solutions. Across 4 videos, we're diving into key areas of the mortgage market to dissect the opportunities they offer and the challenges they pose, and where brokers can turn to for help and advice. These include the evolution of solutions for first-time buyers and the innovation we can expect from lenders in 2025 to help borrowers overcome affordability issues, challenges in self-employed lending, and demystifying the sometimes daunting world of large loan underwriting. Despite lower inflation and rising real wages, affordability remains a key issue across the UK, especially for those in high-cost areas like the South East and London. Ben, I thought we could kick things off by looking at the current state of affordability for mortgage borrowers, what you're seeing from a society's point of view, and which groups face the biggest challenges. So quite a lot of questions there. So what are you seeing?
I think what we're seeing is, things have changed. Over the last few years, we have seen a significant change in everybody's ability to afford, whether it's linked to the cost of living crisis or a rise in interest rates. So what we're seeing at Newcastle is affordability impacts all types of borrowers. We know the challenges linked to first-time buyers and the affordability challenges that they have in terms of taking that first step on the housing ladder. But what we also see is those affordability challenges stick with borrowers throughout their lifetime. And we particularly see a point which is maybe later in life, is people are taking loans over a much longer period. They're starting to see affordability challenges as they're coming up to that retirement phase as well. So what we need to see, and lenders are starting to do, is really focus on that market and how they can support borrowers coming up to that stage in life through various different types of innovation.
Yeah. If I can just add to that, Sam, I think what we know now today in the UK is that the average age of paying your mortgage off is 65. It doesn't leave much room for enjoying retirement. And we've got a cohort of mortgage borrowers today born between 1965 and 1980 who 1 in 4 of them now are really not confident whatsoever that they will be able to pay off their mortgage before the 67th birthday. So I think what brokers need in terms of looking for lender partners, looking at individual client needs, is lenders who can look at, what does that mean for the individual client? How do I look at it on an individual basis? What type of term do the lenders offer? Can you do something in terms of, what type of income can you take when lending into retirement? And what is the age of the end of that maximum term as well? So here at Newcastle, we have a maximum term length of 40 years. We can lend up to the age of 80, and we can consider potentially using earned income up to that age as well. So I think from a broker perspective, it's just really useful to understand the nuances of different lenders who can really help support them affordability challenges that Ben was talking about.
It looks like it's going to be a big year for regulation and affordability after we've had the status quo for years and years of what we thought were quite punitive stress tests, which have proved to actually see us through some difficult times as interest rates have gone up. But recently, the FCA has announced that it wants to improve access to mortgages and, among other work, it wants to relook at the stress test. So as a market, Tony, are we welcoming more innovation in the affordability space?
Absolutely. Our brokers welcome innovation in this space. Frankie, the sorts of things that you do here at Newcastle that you've just talked through are very much welcome, that sort of flexible approach. What I would say when we look at revisiting that stress testing is I think we need to proceed with caution. I am still, very mindful and scarred actually by the happenings and the outcomes of what happened in the mortgage market, 2008, 2009, 2010, and some of those mistakes we're still paying for. So I think we need to be very, very careful and proceed with care. Careful, responsible innovation, absolutely welcomed, but let's proceed with caution and responsibility.
So, sorry, Frankie.
Sorry, Sam, I was going to say absolutely. I think the era of responsible lending, which we've seen over the last sort of 10 or 15 years with the introduction of MMR, has absolutely served us well through a time of crisis of what we've seen over the last 4 or 5 years. So from my perspective, I think we absolutely proceed with caution in terms of the innovation. I think we work together. There's a huge part of collaboration in terms of the regulators, in terms of brokers, lenders alike as well, and our distribution partners to understand where the opportunities are. A couple of the hot topics that we're hearing quite right here, right now, is around LTIs, is usually around the stress tests too. I think my personal perspective on LTIs would be looking at that and saying, okay, as a regulator, we look at that on a volume perspective. It would be interesting to see if there's some movement on there and some innovation that we can do around that, because that tends to shift lenders dial towards the sort of higher loan volume, higher loan amounts. And we previously know as well, in terms of first-time buyers, the challenges that continually exist for them. So it would be interesting to see what we could do in that space.
And Ben, do you think that we are going to see, or do we need to see more innovation other than high loan-to-income ratios, that we've already got sort of 5 times income and things like that? Do we need to see more of that or something different?
I think we need to see more, but I think LTI is a definition that's probably easier to understand, whereas actually, what sits behind an affordability calculation in all of the modelling and the sophistication that lenders and technology firms can now get, it's so much more than LTI. LTI is quite a broad brush. I think for me, exactly what Tony and Frankie said, we have to make sure that we deliver the best outcome for the customer. If the loan isn't affordable for the customer shouldn't be taking that loan. But what I would like to see is us really start to maximise some of that sophistication. Really have a look at some of the regulation that's been in place for many years now. And I don't think it's about relaxation. I think it's just a case of modernising it. And how do we make sure that lenders can support brokers and can support borrowers and really assess affordability correctly? And if the customer can afford it, how can that innovation enable more homeowners to get on the housing ladder or move up the housing ladder? So I think we're now at that point that needs a real rethink in terms of how we move forward, rather than just sticking to those more simplistic measures such as LTI.
I think it's certainly going to be an interesting year because they're calling for evidence or input now, I think. So it'll be really interesting to see what comes out of that and what suggestions that we see on the table to follow. So that's about all we've got time for today. Please join us again for the next segment.